I want to start with the economy. RBA Governor Michele Bullock has ruled out a rate cut in the next 6 months, saying inflation has been more persistent than expected. In part, she blamed high government spending and low productivity for the need to keep rates higher for longer.
We're coming out of an extraordinary period of massive supply shocks, a near-zero cash rate back in 2022, massive fiscal support for the economy, all part of the pandemic and the pandemic response. And it's not surprising, really, that it's taking time for things to stabilise a bit. What we can say is that a near-term reduction in the cash rate doesn't align with the board's current thinking.
Up until this week, the economic conversation has centred on the number of rate rises needed to curb inflation. But now the very real risk of recession in the United States has changed the debate from not only controlling inflation, but to carefully avoiding a recession. Treasurer Jim Chalmers has spoken for some time about the narrow path between not crushing our economy while still bringing inflation under control. And he's warned that the balance of risk is shifting in our economy.
We've said around budget time, before that and since then, just how important it is that we recognise the balance of risks in our economy, domestic and international, growth and inflation. And it's just as important now as it's ever been.
Well, many economists locally have looked to the US for guidance, and they were highly critical of the RBA for not tackling inflation fast enough with earlier rate hikes. Interest rates in the US are higher than ours at 5.5% compared to our 4.35%. So Australia took a less aggressive approach in curbing inflation so as not to crush growth. And while the future CPI data is uncertain, at the moment it looks like Australia's path out of the global inflation crisis may have been better than in the US. The Treasurer today said that the concerns of a US recession show that Australia's economic plan to fight inflation without plunging us into recession is the more responsible path to have taken.
We are confident about the Australian economy. We are confident we can continue to see inflation moderate. We're confident that we can continue to grow. But this is a really important warning against complacency.
And Chalmers claimed his measures had in fact taken 0.5 percentage point off inflation. But Shadow Treasurer Angus Taylor seized on the RBA's concerns about government spending and low productivity.
Our inflation is stuck at a persistent level around 4%. And as I said, the Reserve Bank is seeing that inflation staying higher for longer than its previous forecasts back in May. It is clear that inflation is running the economy, not the government.
So while the main discussion point has been whether rates would have to rise this year, and some economists have even predicted up to 3 rate hikes, it is possible that the next move we see will be an interest rate drop. And that's the prediction of Deloitte Access Economics partner Stephen Smith. He said it is now looking increasingly certain that the next move in the cash rate will be down, not up, with the RBA clearly concerned that its quest to stamp out inflation might derail an emerging recovery. He said with inflation trending down, a weak Australian economy and rising volatility in global markets, Australia needs an environment where business can invest for growth. Well, Herald Sun business legend Terry McCrann will be on tonight just in a minute to break this down. But he says the RBA shouldn't be raising rates and that today's decision to hold was the right one. He says, yes, our own jobless numbers and other indicators like those from SEEK suggest our economy might be close to snapping, and there is absolutely no case, he says, for a rate hike. Well, it's true the growth in our economy is weak and consumption is down a little, but employment remains strong. If we start to see weaker jobs numbers, then there will be cause for alarm. And the inflation battle is far from over, as Michele Bullock stressed today. And even Chalmers admits inflation is persistent and stubborn. And inflation rose 1% in the June quarter in Australia, But in the US, it only went up by 0.2%. Now, this is all sparking a debate about migration internally in the Labor Party. There's a big political push to slash the high migration numbers and stop the government's Big Australia. But those concerned about the economy are unlikely to support a migration cut ahead of what is looking like a dicey next 12 months in the global economy. We are already in a per capita recession in Australia, and the reality is, if the immigration levels hadn't been so high, we would absolutely be in a recession now. Internally in the Labor Party, there's already some resistance to cutting the migration rate. This isn't about the cost of living crisis, of course. For Albanese, it's about politics. If the US plunges into a recession and Australia manages to avoid one, thanks to the narrow path Jim Chalmers is taking, along with the high migration numbers, well, this will be good news for the Albanese government ahead of an election. A rate cut early next year would be the Prime Minister's dream ahead of an election campaign that could kick off in early April.